No, I wouldn't shock me if you go way past 200 even. Now, maybe the reality, for instance, Eric Sprott, it was most influential guy in the silver market, has expressed the view that it probably ought to be 200. And that's simply, going back and looking, if it was 50 in 1980, and if it was 50 in 2011, if you merely factor in the ongoing decay in the real value of the buying power of the dollar, which remember, it increases in quantity about 80% every decade. Okay, so, I probably said this before in talks with you, that when your granddad built a house, it was $4,500. Your dad built one, it was $45,000. And if you want to build a median home price now, it's $450,000. That expresses the ongoing decay in the money unit. The same is true with the yen, euro, a lot of currencies. They continue to decay because the central banks print to fund the governments. Well, silver hasn't expressed that yet. If it were to simply express a price equivalent to $50 back in 1980, I haven't done the math, but I'm sure it's 200 or higher. So, you can make that case, sort of a broad fundamental. But what I'm arguing is it's likely to do it very rapidly, not incrementally. And that's the key right now, I think, is now. Don't think out 2-3 years. Think of what could likely happen in the next couple quarters. We've seen congestion in silver since October. So we've had 2 months of, they sell it, they drop it down, goes back up. They sell it again, drops back down, goes back up. And now for the third time, we're pressing up into the lower 50s. We're $53 now. By the way, we'll rotate our analysis now to March silver starting the 1st of December, when December silver goes into delivery. Also, we'll be shifting out of December gold and shifting to February 2026 contract. And already, when you look at the March silver, it's up to 53.5 area, meaning it's almost ready to touch top tick again, which is 54 in that recent rally on a $1 scale. But that's not the issue to us. The issue to us is that relative performance breakout, gold, S&P, and secondarily, silver says, okay, yeah, the monetary metals are going to go up, but this time I'm not going to be behind you. I'm going to lead. And I think the same applies to investors who don't want to necessarily buy silver futures or calls on silver ETFs, bullion ETFs, or buy silver bullion. They want to buy miners. They want to buy stocks. We technically analyzed that highly likely that not just in the immediate surge we're about to see, and remind me to get back on that subject again in the next 6 months, but over the next year or so, the miners will be gold as well, especially the silver miners relative to the gold miners. So when I speak personally, and I show my position in every report as a disclaimer, I'm heavily into silver related. Calls on SLV, double long AGQ, which is a bullion ETF, but also silver miners. And I'm buying a lot of junior miners now, silver miners, because I think they could be hotter than silver, much hotter. They're extremely neglected. It's a very tiny little sector. And when the hands come in to buy it, money fleeing the stock market or deciding it's a better place to be, monetary metals, those little miners just go vertical. I've seen a lot of days lately where silver's up 2% and they're up 5%. Okay, so I think that's what's going on. But as far as silver, it's in a fairly unique situation, has really partly to do with this broader view of monetary metals going up. But think about this for a minute. Silver's been stuck in a range, $50 highs in 1980, 2011, and even recently either side of 50, for 50 years. What's going on here? I can go show you a chart of copper. Go back to the 70s, 1980s, 1990s, into 2000. And in 2007, after multiple decades of horizontal reality for copper, it broke out, and within a couple quarters, it quadrupled in price. It's late 2005, 2006. And yeah, there was a sharp sell-off after that, but you then, hence, after that surge, a quadrupling in price, you lived in a multi-decade range that is like 3 to 4 times the average price of what prevailed the 70s, 80s, 90s, 2000. for copper. Same is true for lead. Very exciting metal, right? It lived in a multi-decade range, and in 2007, not in sync with copper, a year and a half later, it quadrupled in price in a couple quarters, and since then has lived in a range that's roughly 4 times the price average of that prior multi-decade range. Why is silver still stuck in its 50-year range? Well, there's fundamental arguments for that. Manipulation, attempt to control by some major banks, no doubt with the nod of a head from the Fed and so forth. But when a market makes a mistake, like we've seen stock market bubble tops, and that's when a stock market makes a mistake of, let's say, going too high for too long, even though the truth underlying the bubble is valid, it's overdone it, like the dot-com high. And so when it corrected, quote, corrected, S&P back then dropped 50% by 2002, but NASDAQ 100 collapsed 82%, despite the truth of the reality of internet changing our lives. It was excessive for too long. Silver, we argue, has been in the same position, except on the downside. It's been too low, too contained for too long, and when it finally unleashes, what happens in those type of events is when a market has created a false reality, fooled people into thinking that's where it deserves to be. And when it wakes up, it not only goes to a new reality, but it often overshoots it. And it doesn't take years to get there. It often takes just a couple quarters of a massive tantrum. I think that's what silver is about to produce. Meaning, not only is it going to beat gold, not only are monetary metals going to beat the stock market, but silver could quadruple or even quintuple in a matter of a couple quarters after that spread breaks out, registering the breakout silver versus gold. Meaning, we might go up for a couple more years and probably stay up there because the world is going to shift out of fiat currencies in this next crisis, is our argument. But just getting there could be a stellar event for silver. And so we're telling people, if you want to get into monetary metals, put some emphasis on silver, because you might be stunned and smiling greatly at what it does in the initial couple quarters of that move. And I think we're right there. We're right at the doorstep. I think you've had your sell-offs. You've had a couple sell-offs that got you back into the high 40s. After we got to 52.70 in October, the low was just below 46, okay? And if you look at what happened, it hot-footed out of that hole so fast. If you didn't buy it down there in the upper 40s, it was back up in the 50s again, okay? Then it went to 54, okay? They banged it again. This time you went down to like 48. No, you didn't get to 48, almost got to 48. And then whoosh, now you're where? 53, okay? It comes out of that hole so rapidly because it's my assumption and sort of knowledge. I was talking to some big guys with big money who have been doing that. When that thing breaks under, you see a 40 mark on silver, they come in and put millions into it, okay? And I think they're right. But I think the key is don't look at the price of silver. Don't do Elliott wave stuff. Don't look at RSI or MACD. Overbought is going to have a different definition than what it's had for the last decades. Silver's going to create a new parameter of what overbought is. In fact, you can go back and look even, I think it was in the late 79 to 80 when silver basically went quadrupled to quintupled in 5 months. Okay, that was also when the spread of silver versus gold broke out. Okay, but there was $15 went to 50. Okay, during that time, if you looked at monthly RSI, it was overbought every single month. So if you got out, you missed the move. You get my point? Okay, so I think we're at that kind of historic point where silver's going to throw a tantrum and put itself back into a new reality that is, for some reason, avoided. And, we think we know why. But the guys who've stood in the way of this are going to get buried very rapidly if they still stand in the way, including the banks. And if they're wise, they'll get out of the way or they'll get plowed. You cannot fake reality forever. Well, silver has been a monetary metal as well, including in the U.S. at times, okay? So it's not the only monetary metal. There's other governments out there that are even looking at silver in that regard. But it will go up with gold. But the main point I'm making right now is it's just on the industrial side of silver, which it has, which gold doesn't have, the supply demand for silver has been excess demand every year for like 5 years now. Supply can't meet the demand, and the demand is high tech. There's all this AI talk we have. Silver's involved in all of that in micro basis, but massive quantities, and it's also involved in solar. And solar is quite important in many parts of the world now where you don't have public utilities and so forth, but you're in Africa somewhere, or you're in remote parts of Asia, and the Chinese are satisfying that demand by creating solar cells and solar panels with silver is essential in the silver cell process. And it's those two factors alone are just dwarfing the new supply of silver. And one of the problems with the supply of silver is that it doesn't come from silver mines. Yeah, so about a third of it does, as I understand, but most of it comes from base metal mining. And so the company that produces a lot of silver might not be primarily focused on whether the price of silver is up to increase their production of, let's say, magnesium or copper or something. It's not motivating them to increase production. Why? Because it's marginal in their overall operation. So that's sort of a unique situation for silver supply-demand issue. But as far as monetary metals, it has always been one. Don't forget that. And I do think that at the end of, not necessarily in the first 6 months, but a lot of that could reveal other factors out there as well, which I think will become exposed, that suddenly people start pulling their hair out saying, gee, I didn't expect that. Gee, I didn't expect that. One of the factors that we noted months ago, MSA did, is that Bitcoin was going to crash. And we got laughed at, of course, naturally. And the feverish investors in that market, a lot of them are young. Unfortunately, a lot of them are large corporations now, have gotten hip deep in the crypto market. It crashed. We went from 127,000 to 82,000 in a matter of 1 month to another month's low. Okay, that you call a crash. And I don't think it's over. You're having a bounce right now, but I think it's BS. I think ultimately you could see Bitcoin, which is like 57% of the crypto market, down in the 60,000 area in the next wave of decline. But it's already done its thing. It's proven to people, hey, what happened here? Well, I think the economic crisis that's about to hit, based on government debt crisis, not mortgages this time, okay? The U.S., the U.K., Japan all have huge government debt crisis problems. In fact, the president of the New York Fed, named Williams, was 2 weeks ago had a press conference or a speech or whatever that I'm sure was approved by the Fed in general, where he said, we're going to start buying government bonds now. Quote him, government bonds. And his excuse was, no, it's, no problem there, but it's illiquidity in that market. What does that mean? They're defending the government bond market, meaning they're going to print money. And what's the benefactor of ongoing degradation in the money in it? Gold, monetary metals. And now it's not just a U.S. problem or a Japanese problem or UK or Europe. It's everywhere. And any one of those you can't have turn into a crisis, because if it does, it's too big to fail. You can't have that. And so the central banks will go berserk, and gold knows this. We know we're in a different situation. Plus, we have a U.S. stock market bubble like we've never seen in history. And MSA is arguing since early this year, when S&P was 6147, into the drop, we said it would bounce at 4,800. Sure enough, it did, and it shot to a new high by 10 or 12, 13%. And we've been laboring up here now for about 4 months in this mid-60, 6,600, 6,700, 6,800 area, just around 7,000 or lower. It's not been really gaining. It's just been hanging in there. We think that is a topping process. Just like the 2000 dot-com high took 1.25 years to finally break it, okay? 2007, before you imploded into 2008, it took like a full year of laborious topping process, including with the Fed rate cut. And I think the stock market right now is probably going to see its real sharp weakness, not this year. You might get some more wobble, but it's in the first quarter of next year. And that's when suddenly a lot of other assumptions about where to be or what's likely to be the economic outcome or future are going to go out the window when that beast starts to roll over. And again, one of the first initial technical evidences of that, gold breaking out versus the S&P, is a statement. It's saying somebody's moving big money, and it's just beginning.